All right, good afternoon. It is currently Wednesday, October 23rd, 2024, approximately 2:11 p.m. Eastern Standard Time. So I wanted to do a video just kind of um, explaining a few key um, points within the market to hopefully help in executing profitable trades, right? So, without further ado, let's get into it. So, as you can see, this is my 1 hour chart for USD JPY. So, the first thing you want to do or the first thing I do is I look at the daily to get an idea of what we're looking like for today. And as you can see, so obviously we're bullish on the day. One of the things that I also started doing is also looking at, you can see I have the volume right here. Let me see, I'm gonna hide this one here because we're not going to talk about that right now. All right. So this is the volume analysis for VSA indicator, but you can use the regular volume indicator. And I'll talk about how we use this indicator, but not just this indicator, but the volume down here, period, right? So we see with this move right here, I already knew personally that after yesterday, I mean even the day before, so Monday as well, that once we started getting in this area, that the market was going to continue up into this area right here. And those of you if you've been following the videos, you know that with this indicator, this heat map, that the red areas are areas, price areas or price zones where there's not a whole lot of interest. So you can you can start looking for pullbacks, rejections and stuff like that in these areas in most cases. And I'm going to show you and give you an example of what that actually looks like, right? So again, daily, taking a look, seeing um taking a look, seeing what the volume looks like, surrounding this today's candle, and things like that. So, as we continue to all right, so as we continue to analyze, so we go down. So we know the direction, obviously the overall direction of the market. If you're looking at the daily right here, we can see that it's obviously bullish, right? So no question there, it's bullish. And we're looking at possible rejection in this area. So we'll go down to the 1 hour and take a look and see what things are looking like here. So really the main point that I wanted to make in doing this video is we get caught up on trying to catch the reversal, right? And I think that's, in my opinion, that's the absolute wrong way to try to trade. Trying to catch a reversal, um, from what I've seen and in my experience, is one of the quickest ways to reverse your bank account, right? Because what happens is people, as prices going up, right? Everybody's trying to catch, that move, that reversal to get it, to get on that move going down, right? But again, the reason I say that that's the wrong way to trade, and we do it improperly, right? Because you don't know when the market is going to actually reverse. So what we should be looking for, right? Trying to catch a reversal is a low probability trade. I can tell you that now. Trying to catch a reversal is a low probability trade. So what you should be doing is trying to catch continuations, right? So what you're looking for is a pullback or correction, and then you look to catch the continuation because your continuations are in the direction of the overall trend. Your so-called reversals are counter to the overall trend, which is why people get ate up because they're trying to catch the reversal. instead of paying attention to trying to catch the continuation. Wait for the market to correct itself, pull back, whatever you want to call it, and then catch the continuation. That is a more high probability setup, a trade that is more likely to go your way because it's in the direction of the overall market, right? So again, we have to get out of the mindset of trying to catch reversals and look more so to try to catch continuations. Now, at some point, price is going to reverse, right? But that looks like something different though. Not what you kind of you're chasing, right? You shouldn't be chasing the reversal. It should be clear as day that the market has decided it no longer is interested in transacting at this price point, at this high level or this low level. It should be pretty clear. And I'm going to show you what that looks like. So when we're in an uptrend, as long as price is continuing from a structural standpoint, because you're going to have those momentary pullbacks and stuff, right? If the market is continually structurally making higher highs and higher lows, then that is a continued uptrend. Stop trying to uh, put in sell orders. You're absolutely wrong, right? Now, what you can do, right? And I'm going to show you what it looks like to try to catch a pullback trade, not the continuation, talking about the pullback. If you're going to do something like that, and I'm going to show you what that looks like, and then again, so you can double dip if you do it the right way. So here's how you do that. So this trade right here, I can tell you now, I'm in this trade right here, and I got in somewhere around here. So and I'm targeting this fair value gap right here. I don't know that it's exactly going to go there, but that's what I'm targeting right now. So this is a pullback, right? This is a pullback or a rejection of this area right here, but I timed it the right way. And as you can see, we'll go into the volume and everything another time, but I really wanted to point out how to, again, reversals versus pullbacks versus continuations, right? The focus really should be on continuations. But if you're good enough and you know how to trade a pullback, this is how you do it. I'm gonna show you. I'm gonna give you a good example of how you do that. So this is the 1 hour, and we see that price. One of the things I was looking at is that so with this indicator, I like the colors that it tells me. It gives me an indication. So when I get yellow, so yellow and red are your higher than average. So green is your average volume. Yellow is higher than average, above average, and then red is extremely high volume, right? So these colors, so yellow indicates to me that there's interest in transacting, right? Which, if the market is in an uptrend, then there's interest in continuing to push the market up. As you can see right here, we got a yellow bar here. Again, there's continued interest in transacting here. We got one here. Now, when price starts to get at a certain level, right, we have to start paying attention to what volume is doing, right? So again, here, understanding, I understood the assignment. So I had some on this rejection, right? So this was a doji, right? But in this doji, and at this high level right here, I saw that again. Remember, we looked at the daily, right? And we said on the daily, price was starting to enter an area on the price chart where there's not a lot of interest in transacting, right? Which means we're starting to gear up for some type of rejection and or pullback, right? But that's what this is indicative of. So when we start looking at that's daily. So we went to the hourly and we're looking and we're starting to see that right here. So I started to see this and I saw the volume. So that said that there's interest in transacting, right? But right now we don't know which way that transacting wants to go. Does it want to continue to the upside, or are we going to get that rejection that we think that we're seeing on the daily, right? So you have to wait and look for additional signs that the market is looking to go one way or another. Right. So because if the market was looking to, so again, I saw this candle and I saw that the volume was pretty high. So there's interest here, right? So where is that interest? So on the very next candle, right, on the 9 o'clock candle, right? I get even, about the same amount of interest. So again, but we didn't make a new high, right? So, all right. So now it has my attention. So it's verifying what I'm already seeing on the daily, that we're in an area where the buying is starting to slow down for the moment, right? So we're in pullback and rejection territory, right? Again, verified by the lack of creating higher highs, right? So this candle did not create a new high, and that's what I was looking for. So for me to really, really start paying attention and say, okay, we really are possibly in reversal, not reversal, but pullback territory, right? Because we didn't make a new high at this time. This candle actually made a new low, right? You have to consider the wicks. See, a lot of people, people teach that, you don't pay the wicks no attention. No, these wicks are telling you that right here we made a new high, right? Because price closed higher than because price wicked, right? Price got up to higher than the previous candle, right? So we made a new high. Right. So right now with the 8 o'clock candle, we were still bullish. Right. But then on the next candle, right, we did not make a new high. We actually made a new low with the wick. And then price push back up. All right, got it. Cool. Because you do need some buy liquidity in order for the market to start moving down, right? So again, that's just how that works. So then the very next candle, right? We get some average volume, but it's still above the average, of the previous few candles or what have you, right? So again, we did not make with this one, we did make a little bit of a new high, but not a new high to the bullish candle that we have here, right? Or what have you, right? So again, we failed to make a new high, continuation for the uptrend. So now here's where we start to go down to the lower time frame. So now I said, okay, let me go down to the 5 minute and see what's going on. And here's where it gets really interesting and where you really got to do your due diligence. But it pays off if you do it right, you do it properly. This is how you catch the pullback. This is how you catch it, right? So structurally, right, this is what was happening. Everything that we just talked about, right? This is where it was happening. This is where all the magic was happening, all the fun and everything, right? So here we can see, all right, we made the high. This was the last high. Remember we said on that 8 o'clock candle, right? So it made this high right here. But then we started moving down. You see, we started getting rejection, right? So I watched the market come down and create this higher low, right? We get into a high volume area on the 5 minute. All right, so cool. All right. So then price pushes back up, right? 920, right? Price pushes back up and we fail to make a new high. We fail to break the previous high. That is a good sign. That is a good sign. We failed to break the previous high. So what the market did is we created a lower high. Got it, right? We created a lower high and we started pushing down. Okay, good. So we push down. We don't create a new low just yet, right? The market pushed back up. This is where I got involved. I got involved here in this candle right here. This is where I got involved around 10:35. Once I realized that again, this area was going to hold, right? So this lower high was going to hold because now we got more rejection, right, to the downside, right? So at that point, this is where I get involved. I put my sell order in here, right? Or what have you, because structurally I have a lower high. Price is no longer interested necessarily at the moment in transacting at these higher areas. So price came down, it created this low. That's a great sign. Then we come up, we push up a little bit, we create another lower high. Then price comes down. We get into this fair value gap, price comes down, right? It creates a higher low. It didn't have enough oomph to create a new low just yet, right? So it pulled back a little bit, but did not create a new high. Notice it did not create a new high, right? It created another lower high. That is a great sign. And price continued to push down. You see, that's how that works, right? You need to get the structural changes first on the lower time frame and try if you want to catch that first leg, that first wave on the higher time frame. All right. So here's the hour. Here's that hour. Here's the hour chart. and we just want to catch that leg. We just want to catch that leg coming down. Again, I'm in profit right now. So this is going to be a winning trade no matter what happens. No matter what happens, this is going to be a winning trade. Whether it gets down here or not, I'll trail my stop loss or what have you properly. But for now, this is going to be it's going to be a winning trade. And it's continuing to move in my direction. Again, I got involved in this trade right around the 10 o'clock candle in this area here. So I've got the benefit of majority of this move right here, right? So now I'm going to double dip because what I'm waiting for is I'm waiting for price to come down, give me a higher low so I can catch the continuation to the upside. That's the real trade that I'm looking for, right? I just got the benefit of catching the pullback properly, right? Without getting stopped out and getting ate up, and trying to catch a reversal, right? I'm not trying to catch a reversal. I'm just catching this pullback because I have a good idea of how to do that. But really, the trade that I'm really after is that continuation to the upside. Once price comes down, and gives me signs that it's looking to go back up. Now, here's something to note. Now, as price is coming down, right, I want you to know something about volume. So when it's a pullback, if you want to know if it's a pullback or reversal, typically with actual reversals, you would see the volume increasing as price went down, right? So as price continues to go down, right, you would see the volume increasing, right? Or you would see steady volume, right? You wouldn't see it decreasing, right? This is what tells me that this is just a pullback and not necessarily a reversal just yet. It's just a pullback because, again, as price is moving down, the volume is decreasing, right? From candle to candle, hour to hour, the volume is actually decreasing. It's not staying steady. If it was staying steady, I would say, it's a pretty strong move, to the downside. This is not a strong move to the downside, right? This is going to be short-lived more than likely because there's not a lot of volume backing this down move. It's just the pullback. So what's going to happen is, or what tends to happen is once this pullback is done, like I said, we'll get another influx, right, of buyers, the big guys coming into the market, and I'm going to follow them. They're going to come in and they're going to continue to push the market up. And I'll wait until I start to see those signs. I start to see the volume picking up, and I see the market structure and the candle structure start to change to give me an indication that we're pushing up. And like I said, I'd like to see price come down into this fair value gap and fill some of these orders right here, right, in this fair value gap before we get that continuation to the upside. That's what I'm looking for. If I don't get it, I'm fine. I'll look for other signs, prior to that or whatever happens. Like I said, whatever happens, my trade is in profit. I'll make some money off of this. Right now, let's see. I'm around, 50 something pips in. If I do get down here into this fair value gap, I'm 100 pips or more, right? Not bad for a day's trade. Right? It's Wednesday. I'm good. 100 pips in dip, right? Or whatever I get, right? I'm at 50 something now. So again, winning trade no matter what happens. But again, just understanding the difference between reversals, pullbacks, continuations. Again, high probability setups versus low probability setups, right? One more thing I'm going to show you before I close this out. So one last thing. So when price is moving in a certain direction and it's moving with with a bit of conviction, one thing I want you to understand, the reason that price typically so let's say it's moving down, right? We're not going to make a new high or something, is because breaks down, we continue to make lows, right? Is because so let's say this low right here, right? So this low right here, we can use this one. All right, so this higher low right here, right? It did not create a new high. So this low is actually a weak low. What that means is that possibly if we get a lower high here, there's a high probability that price is going to push through that low right there because it wasn't strong enough to create a new high. So more than likely, if I'm not going to create a new high, then more than likely I'm going to create a new low, right? So this becomes a weak low. Now, I will tell you, this this high right here, this lower high right here is strong because when we came up, right, price didn't create a new high, right? But when we came down, we did create a new low. So this is a pretty strong lower high. So this is a strong area to trade from when price comes back to it, right? So same thing here, right? So this we created a new low, right? But we did not create a new high. So this low right here is a weak low, meaning that when price comes back to test this low right here, it's likely that it's going to fail and not reject price because it's weak. It wasn't enough buyers, or interest here to push the market up to create a new high, right? It created a lower high, but not a new high, right? To, continue to the upside. So that makes this a weak low. And I can pretty much bet on that once the market comes down to test this low right here, again, that it's going to continue to push through, right? It's going to fail. This low is going to fail, right? And we can see on the initial push, right? We didn't get it. We didn't get it just yet. It came down and rejected a little bit. But look, like that was a real small rejection, right? Real small rejection. And then what happened? Boom, we came in. Came in with some conviction, took this low out, took that low out, and we looks like we just took this low out right here. We just took this low out right here. So we're tracking in the right direction. And look, we're getting these fair value gaps. We're getting these fair value gaps. These are excellent areas to take trades. Fair value gaps moving in your direction. When you start getting these fair value gaps moving in your direction, that means you're on to something, or what have you. So you did it the right way. And again, look at how the volume is above average, as price is coming down, right? So pay attention to that. Pay attention to that. And this is just on a 5 minute, right? A little bit different than what we're saying on the 1 hour, because the 1 hour is really what we're tracking as far as our structure. But again, on the 5 minute, the 5 minute is getting us a little bit close to the price action and what's going on right now, today. Okay. All right. So hopefully that wasn't too much. Hopefully it was comprehensive and understandable, and it can be utilized. You can utilize it for your own trade setups. And again, not chasing the market and trying to get reversals, but looking to get in and capitalize off of continuations for high probability setups. So hopefully I've done a great job at explaining that and helping you to understand how to do that, and even throw in a little bit, if you feel like you got it, to catch a pullback properly, the proper way to catch an actual pullback. So that way you can double dip. You catch that pullback and the continuation, to get even more money out of these markets. All right. As always, happy trading and good luck to you.